John Denton, from your point of view, sitting on the APEC Business Advisory Council.
Thanks very much, Sally, and it's a great honour to be on a panel with Noki and my friends, and but it is interesting. One of my previous roles, I was asked to chair the Trade and Investments Expert Group on Indonesia under Ministers Vale, Truss and then Crean. In fact, Noki and I took a paper to Mari Pengetsu and Simon Crean in 2008, and in that we called for the feasibility study for a free trade agreement, and I know Michael McGleeston will be talking later on about that. But it's interesting that that process of review and thinking about trade investment opportunities took place over 2.5 years. And as much as I would like to be able to say that we're hearing some really new and fundamentally different areas where we might be able to find opportunities, we are still, and I think rightly, hearing the same areas. So the challenge must be, what is the mechanism? What is the challenge? I think Ian touched on in particular, which is capability building, which is important. But there is an area. I mean, there are things that have changed, and so I think that is important. One, we do have this process which is unleashed through the economic partnerships process. And the reason I say that is that one of the inhibitors to investment in particular that was identified by the business communities on both sides was a lack of certainty, particularly around instruments to support and protect and facilitate further investment. So we have that. And also since that time, we actually were interrupted by the global financial crisis, we shouldn't forget. And at that time, we actually elevated the whole of macroeconomic architecture in the world to this group called the G20. And the reason I point to the G20, and then I will talk about APEC, is that we actually do have complementary and I think quite important mutual interests in the way in which the superstructures are being shaped, which will enable and hopefully provide greater support and facilitation for further investment. Because one of the challenges with the G20 is to make certain that a lot of the focus is weighted appropriately on the conditions that will give life to further prosperity, which is really how do you support business. One of the challenges with the G20 is it'll end up being a talking shop between gnomes of Zurich and bureaucrats from Brussels. And the whole idea is to actually open that up and ensure that the business perspective is engaged. And that is quite relevant because you start looking at some of the conditions that are emerging around Basel III, which could inhibit the creation and support for SMEs, which are some of the most important elements that operate through our region, like weightings on trade finance, all those sorts of issues. And maybe we'll come back to that in the Q&A. I just raise that now. But Australia and Indonesia have a mutual interest in ensuring that whatever regulatory and whatever global superstructure frameworks emerge are supportive of continued trade and investment and prosperity in Asia Pacific. And there also sits APEC. One of the challenges with APEC, of course, is in a way it's a success. It's actually a quiet instrument of progress. It focuses on a lot of things that are actually not very exciting. It's how do you create the standards, the support supply chains as they operate through the Asia Pacific area? How do you support the access to cards that can facilitate the movement of business persons around Asia Pacific? All those sort of very important parts of building up opportunity. But that also focuses on big issues, and this is where Australia and Indonesia have been involved. How do you facilitate trade? How do you facilitate the next generation of trading agreements which are really around trade and investment, around market integration rather than market access? How do you put in place a superstructure for Asia Pacific which will be supportive of the continued improvement in trade? And as you would have seen over the last 10 years of since Bogor, you've actually seen quite a dramatic improvement in not only the rate of growth in Asia Pacific but also the rates of trade, not only in goods but also in services. In fact, services are now up to $1.3 trillion. So how do you make certain looking forward, and that's where APEC is at the moment, looking forward to the next generation. The subject now is regional economic integration, that Australia and Indonesia, who both share a remarkable role as G20 participants, both share a remarkable role as founders of APEC and countries that have a genuine interest in continuing that, and also have an interest in making certain that the East Asia Summit doesn't become so weighed down with security issues that you can't actually use that as well to drive economic reform in the region. So we actually have a lot of mutual interests, but underpinning all this is how do you encourage, I think, a greater level of engagement between business, policymakers and citizens as we try to build the mutual capability to facilitate even greater trade investment between the two countries. Because I think we've had a number of these discussions, or at least I've been a participant in many, and hope I'm not a causal link as to the failure of trade investment investment levels to really increase. And the other part we might come back, and I note that my colleague and the eminent former ambassador, Bill Farmer, is here. Bill Farmer and I at the moment are part of a panel of 5 that are reviewing Australia's development aid. And some of you may not know that we have doubled it under the first Rudd government, well, the only Rudd government I think it might be described. Possibly it might be too big a statement because he could come back, I suppose. Well, the Rudd government as we knew it. We went from 2 to 4 billion, and now under the Gillard government, there's a bipartisan commitment to double the aid again to 0.5 GNI, which will take it to just on $9 billion. And one of the challenges there is how do you make certain that is spent in a way that it's effective? I'm operating from a couple of principles, none of them which are particularly revolutionary. One is that aid is actually to help poor people, not governments. The second is that what has actually taken poor people out of poverty has actually been economic growth. Economic growth comes from treating the private sector as an asset and not an irritant, and also money should be well spent. And money should therefore be only accessed if you're able to show that what you're spending today could be spent well in the future. And of course, part of the challenge then is with European donors leaving Asia Pacific and actually leaving Indonesia, there is actually an opportunity, I think, for Australia, picking up some of Ian's points, to think very carefully about how we can build the capability to support the kind of governance and private sector settings which can facilitate greater trade and investment. We are talking about going from 2 to 4 to almost $9 billion. There's a significant potential there to really help drive opportunity and therefore take people out of poverty and make this a much more stable region.
In terms of practicality, I think too, taking your fund managers, taking your investors into the place to actually eyeball the place too, getting people to people and getting people to actually see Jakarta now as the modern city that it is and that we all know. I think that's really revelatory to a lot of Australians, and I think that's really important. Our company is investing $100 million every year for the next 3 years in infrastructure and high-tech manufacturing. Which is really significant for us and obviously significant economically as well. David, can I just have your views too?
Yeah, I think we've covered the complementarity pretty well, but obviously we're very complementary in food production. We produce wheat and many other products. They produce palm oil, which we import. Similarly in manufacturing versus delivery of minerals and so on. And services. But I think an area which we haven't discussed to a great deal is the private sector provision of infrastructure, such as roads, rails, ports, airports, hospitals, schools and housing, etc., which we have a lot of expertise in Australia now, some of it good, some of it bad. We've seen some bad government private sector investments, but overall we've got a lot of experience in it. And I think one of the key things in Indonesia, certainly I should say, qualify, my experience with joint ventures goes back over 10, 20 years, but not in the last 10 years since I've been more semi-retired in that period. But I don't think it's changed that dramatically, and I think there's a big need for improved infrastructure if we're going to get businesses into Indonesia. And we do have that experience of private sector investment, so I think that's an area we should really look at.
Vitally needed. If you've ever been on the roads, you see wonderful, wonderful highways that just jam up immediately, and that's just really, really difficult for a lot of businesses in Indonesia.